You know times are desperate when a government considers some pretty desperate measures. In Ireland, they're thinking about telling public sector workers to take a pay cut. The Cabinet's been meeting for 2 days to work out how to cut €2 billion from their budget. But the unions are warning they won't take pay cuts without a fight. It all comes in a nail-biting week that's seen one bank being nationalised and serious questions about 2 others. It was to have been the shiny new headquarters of Ireland's 3rd largest bank. But construction is halted and the skeleton of the Anglo-Irish exposes the miseries of a faltering economy. The bank was bloated on its dealings with the construction industry. In the good days, it's making. Now it's ruin. They hadn't got round to building a revolving door yet, but it would have seen a whirlwind of activity if they had. Undeclared loans coming out, government money and guarantees going in. And then this week, top executives going out and financial firefighters going in as the government nationalised the Anglo-Irish. The AIB is one of the big 2 and its share price has taken a beating. Along with the Bank of Ireland, it's going to need €2 billion of government money. These banks had been less exposed to the construction industry, whose collapse put Ireland into recession, boom to bust in less than a year. And what about the wider parallels between what's happening in the Irish economy and what's happening in the UK?
Well, the Irish economy had a much bigger property bubble than in the UK. Building construction was a much bigger part of the Irish economy, so where in Britain the fall in building construction might be 2-3 percentage points of the economy, in the Irish case it's 10. So that even before the world banking crisis, the world economy went into recession, this economy output was going to fall. Now we're forecasting it'll fall by somewhere between 4 and 5%.
Ireland is a member of the Eurozone. The voters may have rudely sent the Lisbon Treaty packing last summer, but many are now relieved to be in the company of bigger neighbours.
The euro, being a member of the euro area, has saved the Irish economy, in that with the banking system having huge net foreign liabilities, there would be huge problems if we were not in the euro area. The fact that there is that guarantee that we're part of it, that the currency cannot change, means that that's one problem the government doesn't have to deal with, and it would be the biggest problem if we were not in the euro area.
But the security of the euro has a price. Some question whether it's actually making it harder to reconstruct the economy because governments can't control their interest rates, particularly the unions. They're meeting the government tomorrow as it tries to make big cuts in public spending. One idea unions won't be supporting is to give Ireland's 350,000 public sector workers a pay cut.
Given that, unlike the United Kingdom, we don't have any scope for a fiscal stimulus to deal with this difficult period, it would be a double whammy for Ireland and would possibly cast us into a deflationary spiral, which might mean that we would take a very, very long time to get out of it.
When I was here last autumn, Ireland had just been named as the first country in Europe to fall into recession. Even so, the mood here on the main shopping street was remarkably upbeat. People were talking to me about where they'd be going to get some winter sunshine. With unemployment at 10%, the harsh economic winter is biting. What do you think about the economy at the moment?
Grim, and due to bad management by our government, and it's very depressing and very worrying.
A lot of my friends aren't working at the moment. They're kind of after letting go from their jobs and they haven't got as much money as they used to have. You know, they can't spend it on luxury items like going out or shopping and stuff like that.
First into recession, there's no feeling here that Ireland will get out of it anytime soon. As people absorb a stunning reversal of fortune, the government is open to the charge that the good times were based on very little. The famous tiger was running on thin air.
Liz McKean in Dublin. Well, earlier I spoke to Brian Lenihan, Ireland's Minister for Finance. I asked if he could reassure the unions there wouldn't be public sector pay cuts.
All our expenditures are under review here in Ireland at present, all our public expenditures. Like the rest of the world, we're in an economic storm. We're in the Eurozone, so we have to stay competitive. And that's why we're reviewing all our public expenditures. Nothing is being ruled out.
Right. So would you be prepared for a winter of discontent, for strikes, for civil unrest, if those go through?
Well, the Irish economy has headed into the current recession in a very strong shape. We doubled our workforce in the last 20 years and we've very low public debt. But like economies throughout the world, we're under severe challenge. We've seen an increased joblessness and we have to take firm decisions as a government to control our fiscal position. Because if you're a small country, you must preserve your financial reputation in the world. There's been an alarming growth in our public borrowing this year and the government is determined to check that and take whatever corrective decisions are required.
You sound as if this recession has taken you by surprise, but your opposition party, Fine Gael, has laid the blame squarely at your feet, said you encouraged dangerous levels of spending, walked the country, their words, into an economic morass. Do you not take any blame for what has happened to that Celtic tiger?
First of all, as in the United Kingdom and Spain and many other countries, we're seeing a big correction in the housing market, and that is domestic, and there were many domestic causes for that. But apart from that, we're in an international financial firestorm, and everyone is aware of that.
What about regulation, for example? Germany, questioning your lack of regulatory oversight, calling you the Wild West of the Eurozone.
No, Germany didn't call us the Wild West of the Eurozone. In fact, I'm not aware of that, I have to say. We've been called that by others, but not by Germany.
They have looked at German companies under your regulatory system, or lack of, and said this is Wild West stuff.
Well, as far the German minister expressed his unhappiness to me about what happened. But look, there are problems in banks throughout the world. It's not unique to Ireland.
But do you accept that the euro has greatly limited your chance of manoeuvring? You probably went into it too early.
No, the euro is a very strong currency. I accept that. It has given great strength to our banking and financial system in the current crisis. And it is the currency of our trade with many of our European partners. With the United Kingdom, of course, we're at some disadvantage now because we're far stronger than sterling.
It has tied your hands. It's made you less able to manoeuvre in a way that would be most beneficial to the Irish economy now.
But Ireland has never freely floated her currency. For many years we were linked with sterling, now we're linked with the euro. We've never had a huge scope for manoeuvre as a government in regard to currency matters. Small countries which have their own currencies tend to be speculated against. We don't want to be put our country in that position, so we link to a stronger currency.
Talking of small economies, Iceland collapsed. They say the only difference between you and them is 1 letter and 6 months.
Completely untrue. I mean, we've very low public debt. We've a thriving economy. I mean, we're not a glorified hedge fund. We're a country with more than 2 million people at work. We're a very strong, vibrant economy. And in relation to the banking system, our banking system is intrinsically linked with the United Kingdom banking system. We have guaranteed in Ireland the deposits of everyone who deposits with our banks.
And yet you're still having to nationalise the Anglo-Irish Bank.
Indeed, and the United Kingdom had to nationalise Northern Rock because you have to ensure that your banking system is sound and secure and safe, and we're doing that. And the Chancellor and myself are discussing all these matters and ensuring the stability of the banking system in both Britain and Ireland. It's essential that we stabilise our banking system. You cannot let your banks fail, and Ireland certainly won't let that happen.
Well, you entered recession earlier. You're in it arguably deeper. Would you give any advice, any warnings to our government at this stage of the crisis?
Well, I think your government is trying very hard to cope with the effect of the recession, to minimise unemployment, to secure the banking sector in what is a very serious world recession. And I know every government in the world has to adapt policy to events in the difficult circumstances they face today.
Brian Lenihan, your government was firmly behind a yes to the Lisbon Treaty. Do you think that the failings of this government are now so severe that your people will turn round and say yes this time, cling to Europe?
I think reconsideration will be given to that issue, and I think many citizens here in Ireland believe that we made a mistake in voting no on the Lisbon Treaty. We've always had good friends in Britain and in the other European countries, and we need to build on those friendships.
And if it's a yes because of the crisis you're in, that's still a good thing, is it?
Yes, I think it is, because I think one thing that the present recession teaches all of us is that we have to work together to solve the common economic problems we face.
Brian Lenihan, thanks very much indeed.